Well, welcome back, everyone. Wasn't that an incredible week in markets? Breakouts to new all-time highs. A market that closed at new all-time highs. Well, it did on Thursday, on Friday just underneath, and we're still in a spot where technicals point us up. We're in a upward move. Now, there's a lot of lines on this screen, a lot of colors. I want to orientate you to what's important here. If we go back in time and take a look at this channel, it actually starts back in October of 2022 at the bottom of the market. And that's where we had a top in the dollar, as you may remember. Now, we know that Powell and co are in that devaluation mode for one key reason: help the economy and make sure we don't go lower. Well, actually, think about the impact of that 50 basis point rate cut. Is it going to hit Main Street right away and be able to restore credit values for folks and a credit worthiness, if you will, and allow them to borrow more? It's unlikely. It is much more likely that this is being done to signal that there is more coming, and or we don't want things to get upset. You don't want to upset the apple cart before the election. Meaning, keep the market up, keep it prettied up, and or signal that more is coming, which could mean a crisis or an economic malaise is about to set in a bigger way. Now, either or, we are still dealing with a market that is at all-time highs. And what happens when the dollar is cut? Assets that are priced in US dollars, they go up. It's a very simple equation. Stock certificate as the numerator, US dollar as the denominator, and if there's a US dollar is going to be worth a little less, well, the fraction's worth a bunch more. So as far as I'm concerned right now, I've got an uptrend in play from the dip that we had on the attempt prior. We had all-time highs here. We attempted right over here. We then got nudged above them. We had a bearish reversal on Powell Day, and the market capitulated. Smart money saying it's just time to buy. They're going to be printing a lot more, a lot sooner. And effectively, we've got that breakout on Thursday and a range on Friday. Now, on Friday, for members of the Active Trader Room at BecomeABetterTrader.com, and for folks on Wealth Charts, I mentioned, we're likely going to have a bit more of a painful range that does not see the market break down, but does not also give us a breakout and close us at new highs. And indeed, that is how the market has played out. So now, where are we going from here? Well, I want to take you to a tool that can help a little bit with that. This is a volume weighted average price code. Lots of colors on the screen. The center of this bell curve, simply tilted 90 degrees on its left-hand side, is what we call VWAP, volume weighted average price for the S&P 500. When we are at that pink line, the thick pink line, we're one standard deviation above VWAP, and being one standard deviation above VWAP puts us in the uptrend zone. When we get closer to the 2 or the 3, we're very far away from normal, and we tend to pull back or mean revert. Now, as it stands, we ended up closing right on that pink line, and that pink line also marries and sits on top of the one standard deviation above that long-term regression channel. So we've got some mathematical support that is certainly in play. Now, let's add to that mathematical support, which supports us being in the uptrend zone. Let's add technicals to that. If you take a look at the 4 charts that are on the screen, we're now looking at more than the S&Ps. The S&Ps are being demonstrated here in terms of futures. You've got the Russell, the Dow, and the Nasdaq as well. All 4 indices are in buy signal states. You've got the Champion Trend Pack Toolkit applied to price action here. Each bar is a daily bar. And as you see, when we are in the Champion Trend and Champion Cross engaged as a buy, with the dot at the bottom of the screen for Champion Cross, we're in stage 1. When we get a wealth signal, which is what remarks stage 2, especially if we're transitioning from that red to green, we're in stage 2 with the wealth signal. And if we get 2 or more breakout forecasters within 3 bars, we then have in a 3-bar zone, 2 breakout forecasters, we then have stage 3 upon us. And stage 3 is where we can make bigger price moves with less bars. We're not in stage 3, we're in stage 2 on the Russell, stage 2 on the Dow, and yep, that's not a wealth signal, that's a range breaker. Well, does it constitute stage two? When we are resuming a sequence, it does. When you're going from red to green, it's well signaled that would remark stage two. When you're going from green to green, restarting a sequence, well then range breaker suffices. And we've also got it for the ES. What we don't have it for is the NASDAQ. So this is where I break the time frame down. Now, bottom line is all of the daily charts still point us up. The 4-hour charts, which capture a signal throw a little shorter in time frame, 3 to 5 days, can be useful to tell us, is it more likely in the front half of next week that we see a higher all-time high? And as it sits right now, the answer would be yes, that's very likely. So the Russell is not in the best spot. However, the Dow, the S&Ps, and the NASDAQ effectively all closed at or slightly above the top of their champion cross buy zones, and they have previously tested in today's market by and large the breakout forecasters that presented in that last sequence. Now that's what happens when the sequence is over. You end up seeing no breakout forecasters for 3 to 5 bars, or after 2 to 3 bars of no breakout forecasters, you get the fast speed line, the blue line, crossing below the magenta. And that then remarks the end of that sequence. So now it's about resuming the sequence. How do we know it's going to resume? We see the champion cross zone expand. We still have the champion trend buy zone in play, and then up, up, and away. Now, it's not perfect, but it is indeed on the NASDAQ saying we are back in stage one. And that's the primary market that has most of the big heavyweights that are shared between it and the S&P. The champion cross zone expanded into the way it closed today, signifying the NASDAQ is now back in stage one, and we're expecting a push up, which would naturally be a positive for the S&Ps. And as I continue to kind of give you that insight, I must say to you, these are probabilities, not certainties. So there are a lot of things that are coming out in the days and weeks ahead, obviously with election, that we must consider. And we've got the best Wealth 365 Election Edition Summit that we've ever put on, all set up just for you, with speakers curated based on your feedback, speakers that you've never heard from, and focused conversation, education, and strategies from analysts, traders, their tools, their strategies, how they're approaching this market. And from the comfort of your home or your home office, you can watch absolutely free, simply going to joinziad.com to get your seat and join in the only financial event that you can't afford to miss for the balance of 2024. This is the event to help you set the tone for strategy, outlook in this market that is in a grand transition into the election for November of 2024, and it is going to be stupendous. I'm quite looking forward to sharing my insights and outlook and allocation strategies, trading strategies with you when I speak at the summit. I know Rob is going to be doing the same. I know many of our incredible talented folks over at Wealth Charts will be doing the same, and many others as well. We hope to see you there. Simply go to joinziad.com, get your seat now, get all the goodies, and make sure that you're all situated well. And we'll see you at the summit, and of course in videos just like these in the next several days. Have a wonderful, wonderful rest of your weekend, and thank you for watching.